Until now, I don't know if all my friends have insurance actually. I don't ask them. I assume that they did. Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Did you know, for every 2 Malaysians, there is only one insurance policy in place? Today's episode on WangHiro is all about insurance. We're diving into some of the reasons why Malaysians are so underinsured, and if you are one of the millions of Malaysians without an insurance policy, what you can do about it. And for those who have bought an insurance policy, why, when, and how you need to review them.
Louis, thanks for sharing with us those statistics. Now, according to Liam, 54% of Malaysians have insurance. That is what they discovered based on a study in 2020. Now, even this number, I feel it's a little bit skewed, is because the way it is calculated. So what they do is they take the total number of policies in circulation and they divide it with the population of the country. So let's just say, in this case, in Malaysia, it's 33 million population, right? So most likely, we only have about 16 million policies in circulation. So that's how you get your 54%. Now, between both of us, we probably already have 5 or 6 policies. So because of that, then that number is already skewed. That means that the number of people having insurance is most likely even lower, at probably 20 to 30% kind of thing. Because between two of us, we already have like 4 or 5 or even 6 policies, right? So you're taking away the number away from those that are out in the in the population as well, you know. Now, Louis, you dug up some interesting stats from Singapore where there's actually about 3.75 policies per person in 2017. Were you a bit surprised when you found that out, or were you not like, well, it's because it's a modern country? What was your initial reaction, actually, Louis?
Actually felt like it was expected of Singapore. They do, I mean, I work with some Singaporean companies, and I find that the system in which the Singapore government handles like financial education or even financial instruments are a bit different from Malaysia. So I kind of expected that they would have, that kind of uptake in Singapore. Yeah. Okay. I think what surprised me more is that our own Malaysian one is only 54% across like the population of 2 per Malaysian, and that's being very conservative.
Yeah, that's right. You know, when we were discussing about things to include in this episode, I also asked you to look at the Vietnam and Thai, and you dug up like very interesting stats as well, because like 92% coverage under mandatory public insurance. Now, you can't find the individual data point for each person, but actually, Vietnam and Thailand are no better than us, actually. Like, I mean, like, look at Thailand, 30 insurance policies per 100 Thai. That means the penetration rate is 30% or lower, right? Again, it's a bit skewed. But here's an interesting fact for you, Louis. Or not so much a fact, more of an observation I made. If you look at Thai insurance advertisements, they're one of the best in the world.
That's true. I think that goes with any advertising they do. Actually, they're so like touching. I sometimes cry to them.
Yeah. It's very emotionally. I think the creativity of what I see from Thailand, right? It's like, yeah. But on a more serious note, I think for a population that's probably almost double or 3 times the size of Malaysia, I think the penetration rate, they also struggle with the penetration rate or the coverage rate of insurance. Now, you can't start a financial plan or even start building your financial hierarchy without starting with the foundation of insurance. And why I think this is a very important topic. Now, you see, the struggle for most people is the moment they think about finance, or it's always very skewed to how do I grow money. It's like, how much can I invest? What's my return? And I have like an objective of where to go, right? Roughly. Oh, if I get 1 million, I'm set for life, right? But they always think it's like, if I use the analogy, Louis, it's like, I'm going to start a sheep or a cow farm. But before you build that farm, you start breeding your sheep, but you forgot to put up the fences. That's how I think of it. So it's like you start growing your wealth, you start breeding your sheep or your cows, but then you forgot to put up the fences. So once the moment you breed your cows to a certain number, and then they start running away, because you don't have the fences to actually protect them.
Yeah, I think to that point, John, I think a lot of people don't realize that they actually cannot afford not to have insurance. They see it as an optional thing, and I think there's so many reasons why Malaysians are not buying insurance. What I mean, based on your experience, John, what do you think are the main reasons why?
Yeah, that's a fantastic question. Numerous, but based on my experience, like planning policies for people before, for them it's always an expense, and it is intangible. It's an expense and it's intangible. It's like, why should I be paying insurance rather than putting it to grow money? So I said, if I grow money, then I self-insure myself. The second is actually they don't understand risk, or they don't feel the need to understand risk. And there was this joke by my insurance mentor before. I said, if someone comes looking for you to buy insurance, beware. And I didn't understand that until I experienced it myself. So what does it mean? When people come rushing to you to buy insurance, it's usually because something has already happened.
That is too late.
Yeah, it's too late. It's too late. I've got people who are diabetic started calling me. Can you get me a medical card? Wow. I had people that found something in a health checkup, and then they were already covered by company policy, but they realized that, crap, if I leave the company, then I wouldn't have coverage. Then they start, approaching, right? I had people that, already like never believe in insurance, but all of a sudden they discovered a family member had a health scare. So usually those still in time, right? Still in time. But the first two, like what I said, they already have a medical condition or they discovered through a health check, and then they start waking up. So I would even say that I also woke up because of a health scare. What happened was I had an appendix surgery, and it didn't end up well. And they actually dropped my appendix into my intestine.
Wow. That's gotta be painful.
And a 20-minute surgery turned into a 3-hour surgery because they had to try to find my missing appendix in my intestine. But because of that, I was in the hospital for 1.5 months. I lost 15 kilos, and thank God company paid. But within that 1.5 months that I was hospitalized, I was a 29-year-old, I think. I realized the mortality. I realized that I cannot rely on company insurance. So that's when I woke up, and thank God it was just appendix and all that.
That's a very interesting point, I think, John. Maybe we can circle back also to that part on company insurance later when we discuss it. Yeah. Anyway.
Yeah. Correct. Especially company insurance, because a lot of people don't want to buy because of they have company insurance, thinking that they will like, yeah. So where do you think we should? I think one thing that we want to discuss before the company one is how severe is or how vivid is the underinsurance of Malaysia? Perhaps you have an example you want to share?
Yep. I think what's interesting is that you've actually covered two of the points that our own PIDM, the Perbadanan Insurance Deposit Malaysia, has uncovered through their own studies on why Malaysians are not buying insurance. So you've touched on the risk assessment. People are not very good at risk assessments, and then people don't want to. Maybe they just don't want to buy it because they look at others and nobody's buying it, so they're not buying it. And then we have other more interesting ones, like the I think for in your case, it's like the time when something happened to you and then you decided to buy, or what they call the key time points in your life. Something bad happens to you, or I think especially in the last couple of years, COVID would have escalated people's urgencies towards buying insurance. But I think what's interesting here is that they actually put in 5 different points. So number one, people are bad at risk assessment. You've talked about it. So more interestingly is the people being very optimistic about small risks, but then not very good at assessing future risks or bigger risks. Yeah, what are small risks, right? So they talk about like warranties, right? Or car insurance. So immediately, I think just because of how often they see this happening, right? Road accidents happen all the time. Things, their electronics stuck suddenly. These things happen all the time. They're like, okay, I want insurance for this. I want a warranty for that, etc. Okay, so but in fact, those are small things, right? Okay, what's a refrigerator going to cost you? A few thousand ringgit.
Yes.
Car repairs maybe also like a few thousand ringgit for small repairs. But then what people don't consider are the cost of treatment. For instance, if you get cancer, that's in the hundreds of thousands of ringgit, right? So that's one thing. They're very bad at risk assessment. The second one is they avoid it totally, avoiding decisions, especially the difficult ones. We're all familiar with people following the path of least resistance. Like this applies, I think, more than insurance. I think it applies in daily life, right? I think that's the reason why people don't really go to the gym.
Yeah.
So it's easier to just lie down, not go to the gym. It's much harder to just go to the gym. And I think same thing applies to buying insurance. Okay, the default is that I don't buy insurance. I don't have to think about insurance, and then do whatever is comfortable now. Or some people, after they've bought the insurance, they don't really look at the insurance anymore.
Yeah.
Okay, I have one. I don't review it anymore.
Yeah.
And then the third one is that we take cues from other people. Maybe everyone around us isn't insured. This is especially true for young people, 20s, teens. Nobody has insurance, so why should I get it, right?
Yeah.
The fourth one, key time points, like starting of the year. I think again this is quite similar to the health goals that we have. Starting of the year, a birthday, COVID, things like that trigger us. But normally we don't really think about it. The fifth one, valuing present more than the future. So present cost, like what you talk about in that case where people are seeing insurance right now as an expense, right?
That's right.
Like groceries, things like that, okay, an expense, versus like the future payoffs of that. This I think is kind of related to the first one, but this one plays upon the I think what they call the present day bias. So now you think, okay, I don't want to be in pain right now, spending a few hundred, 100, 200, 300 ringgit a month, but I just keep that. It may or may not happen. I may or may not get cancer, And I think this situation, it says, made worse by people having a low income.
Yeah. And like what you touched on about having a low income, for them, they will come from a mindset of scarcity. They will penny squeeze whatever they can because they don't see a tangible value of something they're not going to use. Like, let me just ask you this question. How often you check your spare tire? Actually, when you buy a car, right? When you buy a car, how many people actually looked at whether there is a spare tire in place? Because now modern cars, right? A lot of them are on run flat tires. So sometimes you don't need, especially the more expensive Continental cars, they're on run flat tires. They actually don't have a spare tire. So this analogy is the same like what I give you. How many people check the spec of where the spare tire is and how easy it is? Because you don't use it, like 99% of the time you don't use it. So I think that's one that is very, I feel, intangible benefits, intangible features that you don't need it most of the time, but when you need it, it's actually very critical. And I like that you brought up principle one, which is people are bad at risk assessment, is because what they see, like you said, car and electronics are. I wanted to go deeper into electronics is because car, sorry, is because do you know that it's mandated by law that if to pay your road tax you need to have car insurance? So
Yes.
so how I wish, right?
True.
It's like
That's true.
in the US, for you to go to a hospital is mandated that you have health insurance.
Interesting.
So in Malaysia, we don't have that. Obviously, it's because it's our medication is our medical services are actually very heavily subsidized. And for me, I don't feel it's sustainable. But about this risk assessment, is like car people don't think about it. Yes, you say that there's accidents, whatever, but what propels that, the catalyst, is actually because it's mandated. It's
Hmm.
mandated by law. So how you wish like EPF contribution is mandated that you contribute
Hmm.
if you are like an employee
True.
and an employer, you see. So the moment you like put it into law, right, then people is like, ah yeah, don't there's an additional push, you know. I don't know whether making sense to you. And it's not so much just the risk assessment already. It's like, yeah, I have to do it, right? Because people the law will actually think of it systematically. Like US medical insurance, for example, they know it's not sustainable. They know they have to like manage this risk in a more holistic manner. And obviously, I'm not saying that the US medical insurance system is perfect, but it is an example of how they are taking off that risk assessment incompetence from most people into their hands. Yeah.
Hmm.
Um, on your second principle about the avoidance of decision, I think why bother? If it's ain't broken, why fix it? You know, that kind of
Yeah.
mentality. I'm
That's the
happy along
problem.
this path. Nothing's broken, right? Everything's hunky dory. You know, I'm in my kumbaya mode. So like,
Why add another expense, right?
correct, correct. I,
And
I
and,
like
and
the
I think also like this is a complex product versus like buying bread.
oh yeah, you hit the nail on the coffin. I mean, no matter how when in my early days as an insurance planner, I used to explain this till kingdom come. That's why most of the appointments took me 3 hours. But then I realized, right, by the 45th minute, people cannot compute already. It's too it may be simple for the planner, but for the client, it's like overwhelming, you see. Yeah. The third principle I thought it was very interesting, taking cue from others. You mentioned in earlier episodes that, you were brought up in a way to budget properly, to like, and you took it as like a second nature. In this
Hmm.
particular case in insurance, when you got or your mom got you the policies, was it common for the peers around you to have the same thing? And if yes, did it help influence you? If not, then did it help influence you as well? Like, since others are not getting, why should I get one? You know, from your perspective.
I think when my mom bought me insurance, I was just 18 years old. Actually, never even asked my friends if they had insurance. I just assumed that
Ah,
by
uh,
by this age, people would get insurance. That's what I assume. Yeah.
hmm.
So
But
I never actually went to ask my friend, oh, do you have it? I don't know. Until now, I don't know if all my friends have insurance actually. I don't ask them. I assume that they did because I
mm,
did because my mom forced me to get it.
understand,
And by the time I
understand.
turned 18, my birthday, every kid's birthday, 18 years old, she's like, okay, now you have to buy the adult insurance immediately. Now I'm gonna call my agent and you're gonna
Yeah.
get the papers over, sign everything, and
Wow,
get it done. Yeah. My
wow.
mom is like that.
How you wish every mom in Malaysia would be that. Then I don't think we
I
have
wish
54% penetration rate.
I didn't know how lucky I was. I thought every mom did that. I really
Mm.
sincerely thought every mom did that.
Mm. That's a very interesting observation that you had, and my parents actually bought something for me, but it was a child one.
Yeah,
So
the
when
child one. Yes.
yeah, the child one. But when we came to maturity, we figure it out on our own lah, in a way.
Oh,
Yeah,
so
yeah.
you bought your own insurance.
Yeah, I mean the child one, they cashed out of it, and
Oh, they cashed out of that.
they
I
cash
see. I
out,
don't
and
know
then they
what
give it.
happened to mine.
Yeah, yeah. Because the child one, there's certain child policies that mature at 21. So
Ah, maybe.
yeah, so it's actually like
Mm,
you pay a certain number of years.
mm, mm.
And again, not going into that tangent, but I would highly discourage people to get children's education policy. But story for another day. I think let's get the
Sorry,
basics right first.
John, give me 1 minute. My mom wants me to pass me.
Okay.
Okay, I'm back. Okay, yeah,
Okay, wait.
I'm gone.
So back to the point I made about having a parental some sort of a guidance. Do you think that the influence of a parent or versus the influence of a peer, a friend, would be more influential from your growing up experience, Louis?
I think probably the parent versus the friend. I don't think as growing up you take financial advice from peers. Yeah, I mean friends groups, but once you start working, you probably would ask a colleague because now you see, okay, both of us are adults, we're professionals. What are you doing? But I think
Mm,
if you're a teen, right, or like college going person, at that age, probably you wouldn't ask for financial advice from your
I
peers or
see.
even trust them. In my opinion, and I think yeah, in this same study, they also showed that most Malaysians turn to their parents for financial advice on insurance as
Mm,
well.
mm.
So probably that is a common experience.
What if, what if the parents themselves are clueless? This is
Correct,
where,
correct. Because
yeah.
this is something that I've actually never thought of in terms of insurance because of my personal upbringing. So that would be
Mm,
interesting to see, okay, what are the effects, the long-term effects of every single generation having that problem?
yeah,
Them as turning to their parents for advice and then their parents not knowing what to do as well to
yeah.
mitigate their financial risks with insurance.
Yeah, it just spontaneously popped to me because I realized that it sometimes transcends generation because certain bad money
Mhm.
habits, monkey see, monkey do, ma. And it takes a lot of willpower to overcome the examples of what the parent did. I'm not saying it cannot be overcome. I've seen cases of where like the parents, maybe the dad was a gambler or something like that. I mean, there are some even personal friends of mine who are investment bloggers, investment managers. They had that bad, in a way, bad example, but they actually overcome it and went the other way. But it's not easy because most of it is not on the extreme ends, and they follow down this path with a bad example, and then they didn't even realize it because it's like cognitive programming, kind of thing. I don't know
Yeah,
whether I'm making sense. Yeah.
yeah. I think that that's definitely because that is how you were brought up. You think it's normal, and most of the time you don't even question it.
Yeah.
Like Chinese people eat rice, that kind of thing. It's a staple,
Yes.
right? Like
Yes.
Asians eat
Yes.
rice.
Yeah.
If
Yeah.
you question that, then you know that you're gonna have to change your whole lifestyle.
Correct. Correct. Exactly. Exactly. Digging deeper, right? You also found something very interesting, which is like people of lower income tend to be less insured and have a higher present bias. And earlier I spoke about the scarcity mentality where all these are expenses. Why should I be paying? And actually, I'd like to share a story from a friend of mine who personally experienced this. His name is Casey Lau. I'm pretty sure you know him also.
Yeah.
Yeah. So, and this story was actually published in one of his earlier books, one of his earliest books. So he was actually regularly frequenting this particular restaurant to actually to actually prospect for clients, so explain the policy whatever. So there was this waitress. She was earning probably about 950 a month lah, or was it 800? I can't remember the specific, but it's below 1,000 ringgit lah, right? And every time she sees Casey, and she was like, sometimes you will overhear lah because you're serving them food, whatever. So one day, right, she just approached Casey and said, "Hey, Casey, can you come and see me after my shift today lah? Talk about insurance." We. So Casey was a bit surprised lah. Then after that, she said, Casey explained the whole thing. Then she said, "Okay, Casey, I'll give you 150 ringgit to start my policy." But then she said, "Hey, but you're only earning this much, this much." She says, "Oh, no. Even though I only earn like 850 or 900, by me buying a 150 ringgit policy and I can get like probably 100,000 medical claims, right? I'm like, how much can 150 do if I just save the money?" So Casey used this story to actually highlight. It says a lot of people don't even want to pay 300 ringgit, even though they earn 3,000 ringgit. So he used this to say, shame on you, because the lady who is only earning like 900 ringgit knows the value of putting 150 ringgit, because he or she's going to get like multiple times of a benefit payout in case something happens to her, and she rides the motorcycle to work. Whereas the guy, like 3,000 ringgit, can't even cough up like 10%, because he or she is probably like spending buying a car, whatever, and then cannot save that amount of money to get that multiple effect. So I guess it's not easy. It's not easy. Maybe it was a stroke of luck that this waitress keep on hearing Casey every day presenting to prospects in the restaurant, and then like free education kind of thing.
She got that education, and then she could make that wise decision for herself.
Correct. Like 150 back in those days, you're talking about, I think Casey started doing insurance probably about 20-30 years ago. 150 could get you quite a decent sum, probably like 100K annual medical coverage. Yeah. So
I think that's probably about 300 plus present day money, right?
Yeah, exactly. So to your note about like lower income or less, I think it's not easy to change that mindset. And maybe you share with us what are the factors that you found about the things that impacted the insurance uptake actually.
Yeah. So those were the ones. So I think particularly for the lower income groups, it's just present bias is that now I'm starving, right? I don't have anything to eat. I feel like, okay, I actually need this money for something else. So 1 in 4 of people who earn 2,500 and less thinking this way, they just feel like they cannot afford it. That is like a real problem that they have, is that I actually don't have the money. For this segment, I think they just think, okay, I don't have the money. I don't know, like with regards to this particular segment, what can be done? Is it something that the government is already doing, stepping in, providing cheaper insurance policies? And maybe they are available, but uptake might be slowed down because people in this segment don't know that there are cheaper insurance policies, and maybe the idea of like analyzing everything is too complex. And probably, John, this is also something later we will be discussing what you can do if you fall into this segment, what you can do about it. What are your options? What can you? How can you start?
I think in one of the episodes that we recorded, and it's coming out really soon, is about the different genres of insurance. So stay tuned. Watch out for that, because that will actually help you understand kind of a framework of how you should plan your medical insurance or your life policies or critical illness coverage. I think in this episode, we just wanted as a whole to help understand more of the psychological decision-making biases that are like, just even, you don't even open the door. So like the mechanics, like the genres of insurance, what kind of coverage, it's like, at least you open the door, then you see, there's 4 more doors, different options, right?
I think because a lot of people are not buying insurance, as we've seen from this study, is that it is psychological. It's emotional. Those are emotional reasons stopping people most of the time.
Yes. I wanted to touch on the fact that you found two important factors that had a big impact on insurance uptake. And one of it was friends and family, which we discussed about family. What if the parents don't know and then they're also as clueless? But the second interesting influencing factor is actually professionals. Now, when you found this out, what was your initial reaction, Louis? That professionals actually help, and yet we, as planners, financial planners, as insurance planners, we struggle because it's still at a psychological level, and yet what's interesting is that the professionals actually make an impact. So, what was your take actually on this?
So, I mean, myself, my personal experience with a lot of planners is very unfortunate. A lot of them actually struggle with money themselves, and
Ah,
and that at the level where they are serving people who make like four figures a month, the normal salary lah. They If they're willing to serve customers at that level, sometimes they are not at the financially comfortable level. So sometimes I think instead of giving their clients or customers all of the options available, they prefer to sell them the product that will give them the highest fees.
that's a very good point. That's a
So
very
I
good
think
point.
it's also like it comes to the point that maybe as a country, we don't have that high of a GDP in
Mm,
general,
mm,
and it makes people hungrier in a way that pushes them towards like fulfilling their most basic concerns at the moment
mm.
rather than serving the right purpose. I think that could be a problem, even though a lot of people depend on them to give them the right advice. Instead, what they're getting is a sales pitch for
Understood.
the product that gets them the highest fees.
Ideals. So on one hand, it's ideals. On
Yeah.
one hand, it's like feeding the stomach. So obviously,
Mm.
right? You
You
can't
can't
live on
blame them. You can't blame
yeah,
them.
yeah.
It's a very hard balance if you have 2 kids, 3 kids at home. What are you gonna
Correct,
do?
correct.
Yeah.
And I will share with you another interesting insight on that angle. Is that most of the time people are, uh, how do I call it, encouraged to join this industry based on a certain promise of a certain income.
That is true.
Yeah,
That is
they're sold a dream.
the
You see?
dream. Yes. Oh,
Yeah,
actually, I've seen like pictures where oh, you're gonna earn this dream vacation. Nobody
yeah,
is coming in like I don't know. I've not seen any that comes in. Serve the public good, become a respected financial planner. Is that we have all of these posters, very glossy, colorful posters telling, okay, win your next Bali trip,
yeah.
Paris trip.
Yes.
This this
Correct,
this is
correct,
this
correct,
is what
correct.
happens, and probably that then incentivizes people who want to get that kind of commission into the industry more and more.
Correct, correct. And self perpetuates. Here's the
Mhm.
funny thing. I like it that you brought up the point that most insurance planners can't even don't even have a decent financial standing, and I can kind of confirm that lah. And usually those guys that make it, they've already reached a certain pinnacle where they had a lot of sales. They just push through, and then from there, ideals have taken kind of a backseat. You don't see people who are financially very very well to do already come in, because one, it's a lot about humility as well. You take a very big beating when you start selling policies. It's a change of ego and humility. Second thing, and this is where I find very interesting. Most insurance planners that are successful, uh, they ironically are not very good at investing themselves. But that's story for another day. That's my observation. It means they're very good at selling the product, make very good money, and they deserve it because they do help their clients. But at the same time, overall, their finances of course, I'm generalizing, kind of in shambles. But anyway, the point I was trying to bring across, or to try to tease out from what you've studied and what you sample, is that the two influencing factors of insurance decision making. So, in your case, your mother was a big role. In my case, I had a good professional serving me. But in between these two, um, for the general public, um, why even with these two influencers, what else is stopping them from coming through? I mean, let's just say ideally you have good parents who educate you, and professionals that go out and peddle. What else do you think are the roadblocks that prevent them, from your experience, Louis, from prevent them from like coming in and trying to like even hear out and as an option?
I think just going back to the few principles earlier, it's just all the psychology. I don't need it now, you know. My friends are not buying it. I had one friend
Mm.
5 years ago contact me to ask me for advice on an insurance agent for her parents.
Okay.
So what he told me is that her parents didn't even buy insurance ever, have never bought
Mm.
insurance, and now they were in
Mm.
the 50s. And now I think the reason why they were considering the insurance at that point was because her dad got a medical condition. So I told
Understand.
her, okay, so these are the agents that I trust, they're very good. But it really surprised me because this is a childhood friend of mine,
I see.
and they are actually very well to do, very, very well to do. So I think it's just sometimes the mindset behind
Yeah.
thinking of insurance. Sometimes they think insurance is a scam. They see,
That's
okay,
exactly.
mhm. They see is that, okay, people who sell insurance are scammers. They're here to make
Mm.
a fee, which is sometimes true, but at the same time, they have to make a living. They have to get paid to do those things, right? For you, they're giving you that time. They're helping you to fill in those forms. Those a small fee every month
Yeah.
isn't unreasonable. I feel,
Correct.
but I
Correct.
think in their mind, they feel like, oh, okay, they're taking a huge chunk of it. I'm being scammed. It's like
Yeah.
a monetary scam. Instead of thinking, okay, I'm paying this service provider to give me a service. May or may not scam me. I may or may not get the best deal, but having insurance is better than not having insurance. They
That's right.
wouldn't do this.
That's right. That's right. That's right. No, I love that example. Actually, I was trying to lead towards the scams because here comes the nuance of scams. So the examples that you gave were more of like a phishing scams, in the sense that people buy into an insurance but they never even got it. um, I'm going to share some examples of, okay, so it's a borderline scam, or I think missold. Okay. So
Mm,
there was this example of this guy who his parents bought the policies, and when the son actually asked the parent, "Oh, are you insured?" "Yeah, I'm insured, 10 million." So the son was like, relieved. Okay, I like, my dad's covered. And all of a
mm.
sudden, the father actually passed away. So the father passed away, so he started to file the death claim, and that 10 million couldn't be claimed.
Wow, what
So
happened?
yeah, so here, maybe you want to take a guess. What was the reason why that 10 million couldn't be claimed?
My
Or
only
the
guess is the manner of death.
yes, spot on. So this 10 million, the policy that was bought or insured was actually a PA policy because it was cheap. So PA stands for personal accident. So coverage is
Mm,
very high, 10 million, and the policy is cheap. So when people think, oh, I buy insurance policy, I buy the cheapest. But what does it cover? It covers only personal accident. The father
mm,
died of bacterial meningitis. I think it was in. I tried to look back into Facebook to find that. I saved it somewhere, but I couldn't find it. But the son wrote a long post that he was scammed. The father was scammed, whatever, and it's like it's the fault of the insurer or the insurance middleman. But again, it's very difficult to judge without knowing the details, or very difficult to come to a conclusion not knowing the details, right? And a few months after reading that, and I was still a planner, I actually met someone I was prospecting, of a very similar nature. He
mm.
also had like 10 million coverage, and he said he was overinsured. But then when I look at the amount of premiums he was paying, something was off, because
Too cheap.
yeah, it's usually 10%, like what I shared with you before, Louis. You should roughly pay not more than 10% of your take home to have sufficient coverage for yourself, be it medical, life, everything to be sufficiently covered. If you're paying less than 5%, something is off. If you're paying more than 10%, something is off. That's my general rule of thumb, right? And this
Mm,
person was paying less than 2%. So I was like, something is off. So going back to that 10 million and why he couldn't claim, bacterial meningitis is not covered under PA. PA just stands for personal
right.
accident. That means you get
Right.
into a car accident, and it's always cheap. Why is cheap? Because the probability of it happening is low. A lot of people see like car accident, they think it's very, very common. But
Mm-hmm.
people die of cancer, heart
Yep.
attack, and all that is even more probable than you dying of a car accident, you see.
Correct. Correct.
Yeah,
So the
yeah.
media hype around it sometimes. People think
Correct.
they'll probably die from an aircraft accident more than cancer.
Yeah,
But
exactly, exactly.
the
Yeah.
probability is so small. Yeah.
Yes, exactly. Like earthquake, the one that just happened in Turkey.
Mm-hmm.
For those who have family members that perish, may they rest in peace, and our heart goes out to them. But the probability of you being in Turkey at that point of time and like getting hit by the earthquake is like the probability is like really, 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 really small. I mean, as a foreigner, if you're traveling or whatever there. And I think the point I want to highlight is that these insurance scams doesn't necessarily needs to come from phishing. It could be mis-selling. I think the
Mm,
right term is mis-selling or
right.
misalignment of the coverage objectives to what
Mm-hmm.
is being paid for. So again, rule of thumb, I don't want to go into this episode, Louis, but it's usually like what I said, less than 5%, something may be off. You may be underinsured. More than 10, you may be overinsured, but undercovered.
I think
Ah,
John, would we say there is a protection gap there? Is that considered
yeah,
protection gap?
correct. So I've had clients that used to pay 16,000 ringgit in premiums a year and not have a medical card.
Wow,
Yeah.
that's so okay.
Yeah.
Okay, so
So
what were
again,
they
you want to say it's a
for?
scam? It's not a scam. He's got
No.
policies.
Mhm.
He's covered, very well covered for death, but
So
not well covered.
there's just like a gap between what he thinks he's covered for versus what he's
Correct.
really being covered for, right?
Correct.
Mm. Mm.
Yeah. And I
Okay,
think
maybe John, I think we can now just thinking about that, we think about like, okay, what can we do then? What can the listener do?
very good. I think it's a good segue to like what are the action steps that is
Mhm.
required now. I think first and foremost, when you are already open to have an insurance, the first act that any insurance planner worth his salt will do is actually review any policies that you have, existing policies that you have. That's the first port of call, I would say. Lah. Now, if
Mhm.
you are like someone who does not have an insurance, even better because they start with a blank piece of paper and they should ask actually some fact-finding questions. How much you're earning, what kind of expenses you're doing, does your company have insurance, all those kind of fact-finding questions, rather than, oh, okay, here's what's your budget? Actually, sorry that I may be generalizing, but any insurance planner or I would say agent that comes out and says, "What's your budget?" The first question is that, "What's your budget for insurance?" Right? That's for me. It's kind of like a red flag because
Mm.
that's going about insurance the wrong way. Instead, it should be understanding the client's needs first. Like
Mhm.
how much are you spending? How much are your expenses a month? Do you have a history? Does your family have a history of certain health conditions that you're more probable to have? Those kind of fact-finding questions are usually a good sign that he or she, the planner, is actually headed down the right path. Now, the second thing you have to consider is how, once you've done that, you've gotten a basic policy done, a good one, is how often you should review it. There's two triggers for me. One is actually milestones in your life, Louis. So, what do you
Mm.
think are milestones in your life?
Um, Let me see. Marriage,
Very good.
birth.
Birth of a child, right?
Yeah, birth of a child, not your birth. Okay, so the birth of your child. So
What are the big financial checkpoints you have?
like buying things, is it? Like
Yes, yes,
buying
yes.
car, buying
Buying
house,
car, buying
buying
car
house,
usually okay lah because you've got car insurance to cover. But usually buying
buying house,
your property, yes, I
your
think
first house.
yes, yes.
Mm, I think that should cover most already.
That's right. That's right. It's usually it comes in years of five-year cycles, I would say. So when you graduate, 2022, 23. Okay. So between 23 to 28, you get your first paycheck, you start making certain financial decisions. All right, buying a car, maybe even saving up for your wedding, all the kind of things. So those within that 5-year band, there's actually one milestone. And then from 28 onwards, you start getting married, you may have a kid
Mm,
to your 30. So there's another. So I would rather than use a time base, that means like 2 years or 3 years, I would say, besides that, look at milestones of your life. So it's like you're
mm,
about to get married, you're about to like have kids, so those are trigger points that it's a high time that you should review your policy lah, I would say. And there's no harm, especially if there's an agent or there is a planner, even better of a planner that has your interest at heart that you are comfortable with. I think and if you do it more than 5 years once, I think it's not recommended lah. You should do at least one every 5 years lah. Yeah, yeah, I would say that. Yeah,
okay, interesting.
yeah, yeah.
But
Um,
one question, John, I
mm,
wonder if, let's say, having a sudden medical condition be something, to consider as well, like to review your policy after
okay.
you get hit by
Before
something.
or after you got the policy?
After. So let's
After.
say I never knew that I had this problem. Suddenly I had this problem. You
Mm,
suddenly discovered that I had some medical condition,
mm.
like a split like disc or something like that.
Okay, slip this. Yeah,
Yeah, slip disc. Yeah.
yeah. It's a bit too late because
Oh.
by then, if you've discovered it, and you want to add coverage or whatever, uh, not likely to happen. But if it's
Mm-hmm.
something less severe, like let's just say you discovered that you've got increased elevated cholesterol or whatever, right? Even if you wanted to increase, the insurers will say, "Hey, why all of a sudden, right?" They're like,
Yeah.
yeah,
Then I
yeah,
have
yeah.
to ask you to do a proper health checkup.
Correct, correct.
Okay.
So the ironic thing about insurance is you buy when you don't need it.
Mm.
So it's always
Mm-hmm.
I rather the reviews are being done at financial milestones in your life rather than
Mm.
health milestones, because when the health milestones occur,
Too late.
it's usually a bad thing lah. It's usually
Okay.
too late.
Okay. Got it.
Yeah, yeah. So maybe some pointers about key things you should do when you review your insurance policies at this intervals is, one is you got to look at what is the added liabilities or debts that you are going to cover. So for example, at 28, when it's just a wedding and you haven't gotten a house, I think liabilities wise is still at a minimum. But when you're like in your 30s and you start buying properties, either for your own stay or for investments, I think those are the key things. It's usually the liabilities, because there's a saying,
Mhm.
you don't want to go to heaven and leave hell behind.
Oh, right. True.
Yeah, because by then you would have beneficiaries or
Mm.
dependents. I wouldn't say
Dependence.
beneficiaries, I should say dependents. And
Dependence,
when you
yeah.
have dependents, those are the things that you want to use insurance as a financial protection mechanism. Yeah. Yeah. Um, do you do you think it's a good segue to cover company insurance now? I think a lot of people will like say that,
Hmm.
hey, I already have company insurance. I do not need insurance. What's your take? I mean, I'm pretty sure you have friends.
Yeah. I think now we've covered the people who already have an insurance. What should you do? Okay, make sure you review it with your agent every milestone. Okay, every big milestone in your life. Don't wait until you get hit by a medical condition. Okay,
Correct.
so
Correct.
that's for the folks out there who have an insurance policy in place. So what about people who don't? Okay, so yes, I think it's a great segue into company insurance because probably this for people who are just starting work, the fresh graduates, and maybe your job comes with the benefit of company insurance, and you're like, okay, I have company insurance. Why should I get my own insurance? Why do you think they should still get it, or do you think it's actually enough, John? Myself, I don't think it's enough.
Yeah. You can fall in love with the company, but company can always fall out of love with you.
Very true. Very true. I think that's my idea around every transactional relationship. I mean, basically, it is a transactional relationship. No matter how good the company treats you, it's still a business relationship. You just look at it that way.
It's a privilege to have benefits, but it's not a right. A right means like your birthright, you're a citizen of Malaysia, right? You cannot be like stripped away from you, right? Because it's a birthright, right? But all these are what I call fringe benefits that are privileged that it can be taken away from you at any time, right? And okay, rather than me like giving you a concept, let me share with you an example. This is a real life example of one of my clients. Okay, so her father actually worked for an international oil company, right? Very senior person, fully covered medical coverage of insurance and all that. At the age of 45, if I'm not mistaken, he had a stroke, his first stroke. So he was treated, private healthcare, company paid for everything. At the age of 47, he had his second stroke. And it was like, company paid for everything. The third stroke that he had, company paid, but because he was like unfit to go offshore to work anymore, the company gave him what we call a golden handshake. That means they pay out like 2 years of your salary, one shot. Thank you for your service. You're free to go, right? Because I can't afford to pay for you not being able to go offshore, and yet you have to like work in the office. So here is, I think the company was very generous already. They continue paying, right? Continue paying, but on the third attempt, it's like, yeah, right. And here comes the problem that a lot of people don't realize. A company is not a charity. And that's one key example that the moment the company lets you go, right, you cannot, by that time, you can't even buy. The first stroke, the moment you encounter the first stroke, even the company paid, right, you cannot buy policies anymore. Who's going to cover you? Which insurer in the right frame of mind is going to cover you? It's like this phrase.
It's a cost benefit thing, right, John? Like a cost for everyone, your company, the insurer. So who's gonna, bear this cost?
Correct. Who's gonna bear this cost? And even if, let's just say, company was willing to bear this cost in my friend's father's case, right? They bear the cost. But at that time, can you even buy? It's like you want to buy, you start looking for the umbrella only when it rains, Before it rains, you should have bought the umbrella already, right? But this is like really, and there was this phrase that I keep on sharing my clients, and I said this. I asked them this question. Let's just say I guarantee you that this company of yours would hire you and not fire you until you're 60 years old. That means you are accorded employment status all the way until retirement age. But in return, can you guarantee me you stay healthy all the way until 60, then only you buy your insurance?
Wow, that's a loaded question. I
couldn't. Is it possible or not? Can you guarantee me return, right?
No. 100% no. Yeah.
So usually this question usually wakes a lot of people up.
Yeah, I think it goes back to point number 2. I think about just going with the default. Oh, I come in, it's there. Why should I look into anything else that's the problem with some people when they already have company insurance. Yeah.
Correct. It lulls them into complacency lah.
Yeah, it's a complacent, it's a complacent place. You think it's so like a lot of people when they get hired by a company and they get all these perks, they think they're very important.
Yeah, exactly.
We've seen in recent layoffs even Google employees who have been hired by the company for 17, 20 years get laid off in an email.
Yeah.
So everything, all the benefits that come with being a Googler goes away in that one moment.
Yeah, exactly.
Yeah,
Yes.
that can happen to anyone at any business,
anyone. That's right.
workplace,
Yeah.
no matter, even if
Yeah.
they kumbaya family with you. You have to accept the fact that a work relationship will always be a transactional relation, and there's
Correct.
no problem with that at all. You just have to be realistic.
Correct.
Take care of yourself, take care of your work differently.
Yes, that's
Yeah.
right. Perfectly said.
Yeah.
So probably the last question we want to address in this podcast, Louis. So go
Those
for it.
people who don't have insurance. So
Yeah.
my question to you is, can you actually afford not to be insured? We know that, okay, sometimes you think it's expensive to pull out the $100, 200 ringgit, 300 ringgit to pay for insurance right now when you're actually struggling. And the other question is actually, why don't I just keep that money for myself and I can pay for my own medical expenses, or even rely on the public health care? So is it true, John? Can I actually afford not to be insured, do you think?
No. I give you real life example again. First one is at 150 to 200 ringgit or even 300 ringgit, right? For a typical medical card, you are a non-smoker, probably below the age of 30. It would easily buy you like $1 million a year in terms of medical coverage, right? $1 million amount to be able to claimable as hospital bills, right? Now you're thinking, wow, why do I need $1 million, right? Because the average treatment for, let's just say, cancer, it's like you're talking nothing less than 6 figures. All right. I mean, I've shown probably to you examples of one oncology or one you don't even talk about immunotherapy. I just talk about chemotherapy, right? It is nothing less than 6 figures a year. Now, what's worrying is that people who say that they want to do government treatment, yes, government does provide for all this oncology chemotherapy treatment, but can you wait? Because there's the other like 50 odd percent of people who don't have 50 odd percent of Malaysians who don't have insurance are also thinking the same thing. they rely on it. Here is my biggest question for those who are opposing to get private healthcare is that, can you wait? When I say real life examples is this, I had a client, the mother was already not in the best of health conditions, and it was just a gallbladder stone removal, okay? And that by then I couldn't insure her because she already had other pre-existing health conditions, diabetic or that kind of thing. And she went to a government hospital in KL. She was told to come back 6 months later. Now, I don't know if you know gallbladder stone, if you like, you know how painful it is.
Yeah.
It's like in serious pain. And it's not that expensive. I'm not even talking about cancer, But then, if you go to a private healthcare, you're probably talking about at least 5 figures. It wouldn't be 6 figures, but 5 figures.
I mean, so 5 figures is on the low side of the cost. Medical treatment.
Exactly. So my question to you is this: can you afford not to be insured? Because you are paying, if you were healthy and you got on the medical card early, right? You're paying easily a ratio of 1 to 10, 1 to 12. That means for every $1 you're paying, you easily get back 10 times, 12 times, or even more if you start paying younger and you claim later, right, in life.
Yeah, and John, there's also the problem of medical inflation. Let's not forget.
Correct. You spot on again. Rule of 72, Louis. I don't even remember. 72 divide by either the rate of return or the inflation rate. It doubles how fast you doubles. So medical inflation in Malaysia is about 12 to 15%. So if you use 15% on the extreme end, 72 divided by 15, that means your medical expenses doubles every 5 years. I repeat,
Wow.
medical expense doubles every 5 years if the inflation rate
But
is
our
at
salary
15%.
doesn't
Yep,
always.
exactly. So, so
If you did.
yeah, I mean, like, even if I was hospitalized once for food poisoning, and like they just gave me drips, one ultrasound, and some stool sample, blood sample, right? That cost me like 9K, no, 8K,
Wow.
about 8K. Yeah,
Yeah,
it's just
yeah, something
drips.
simple. Something simple would be like a high four figures. A normal thing would be like a low to mid five figures. And
Correct.
cancer and other more serious conditions easily 6, 7 figures overall.
Yeah,
Yeah, total.
correct. So based on that answer, I hope you guys wake up and
But let's say, John, today if they are interested to buy, like how can they tell if the insurance agent is good?
a fantastic question again. As I earlier pointed out in the insurance policy review, right? I think the first part of that meetup is actually to educate you. That means they would start to ask you qualifying questions to find out the prospects knowledge about policies or insurance. If the insurance agent, usually these are mainly I wouldn't like to use this word, but more of a product person. They will start bombarding you with like features of the product or whatever. A good agent usually start by asking qualifying questions and education. So probably he will spend 30 minutes to 45 minutes just trying to gauge what is the understanding of the client towards policies and educate the basic concepts of it. That for me is already a very good sign of a good agent or a good planner. The second thing that I would use as a benchmark is actually them showing to you the ratio calculation of how much you should be covered. If you start like if they start telling like what's your budget, how much can you afford, that's actually a very big no-no in my vocabulary for planning lah. Because how would the client know? You are the one that's supposed to tell him how much it's always, you see, here it's always done in the reverse. It's like how much your budget, and then they go and fit a plan for you. But that plan may not be sufficient to cover the client, you see. Rather, you should
Right.
work
Because
out his
tailor
needs.
fit,
Yeah,
tailor fitting. Yeah.
tailor fitting, correct. And it's not that difficult. I mean, like I've done for so many clients, right? Actually, the experienced ones, within like 45 minutes, an hour of asking the right questions, you should be able to get to the bottom of the client. Usually what takes longer is that the client already has a bias or mindset and start answering what I call frivolous answers, very surface-based answers, because they think by releasing too much information, I'm like the agent or the planner will actually use it to ransom or blackmail. No, the more you give us, the more we can actually help you to plan and to get a better deal. But the appointments that usually take longer is because the clients are withholding information out of fear of, yeah, that's my experience. Out of fear of like the planner actually uses it to like hold the client ransom. No, we are asking all these qualifying questions so that we know how to optimize that plan for you. You see, and that's where, to your question about how the insurance agent is good, is that they are actually more listeners than talkers. They ask and they actually jot down, take notes, and then they'll ask more qualifying questions, or they will explain concepts to you, and that's why they take a little bit more time. Yeah.
All right. I think that's very those are very, very good points. I'll also take them into account when I look at my insurance agent next time. I think very, very good points. I think we had a very good discussion today, John, around insurance and why Malaysians are not buying them. If you're one of the millions of Malaysians who don't have one yet, make sure to talk to an agent or few agents and see if you find anyone that can help you. And if you do, make sure to also talk to your agent every now and then, especially when you hit your life milestones, to find out about any changes you need in case you have a protection gap.
Yeah. And if you don't have anyone you trust or whatever, drop us a note, on the WangHiro website, or comments in the YouTube comment section below. We do have a circle of trusted people that we work with, and to give you a non-obligated review, because you make your own judgment call on whether a planner or an agent actually can best serve you. And you can take that journey from there onwards. Louis, it's been a great chat. I hope this episode just wakes people up. And if you like this kind of content, share with your friends, like-minded individuals. Hit that subscribe button, hit that like button, so that the YouTube algo can actually spread it to more like-minded people like you. And we hope to see you guys in the next episode.
See you guys. Bye bye.